All right, guys and gals, back to work. Let's make some money this week. Boy, FOMC, couple days away, and markets are all chopped up and sideways range bound ahead of what might be the first rate cut of the year this year. Now, you know me, right? I love range bound markets. Those ranges act like magnets. The game plan is very easy to make money in these choppy sideways ranges. I have a number of trades I'm tracking for tomorrow. We're going to cover all my favorite trades, of course, in this video tonight. By the time we're done tonight, everyone will have a roadmap to make some money on Tuesday morning as well. The charts are all ready. I'm glad to see you are ready right along with me. So let's not waste any more valuable time. Let's dive into it because we get some money to make tomorrow morning. Charts are looking great tonight. Nasdaq triple Qs are all ready. The Emini and the SPY is ready. I have three very simple but important clues on these charts right now that are telling us where the winning trades are waiting for tomorrow morning. One of those clues is right here on these hourly, these 60-minute higher time frames. We are bullish overall on the S&P and SPY. We're bullish overall on the Nasdaq and the triple Qs. But remember, we had that big move up last week after CPI, big move up last week in both the S&P and the Nasdaq. We're definitely bullish overall, but we're way high up right now. I'd like to wait for a nice deeper pullback on these hourly time frames, get down into some key levels of support down below us. That will definitely give us some short trading opportunities and of course some pullback trades we're tracking for tomorrow. That's one very important clue, one of three clues I'm watching for tomorrow. We are bullish, but we're way high up right now after that big move higher last week. Now, I have two more important clues on some faster time frames because it's good to know the big picture direction on the hourly chart, but this is not going to help us time the right entries for tomorrow. We're going to cover two more important clues and wrap it all together for the right entry timing here in just a moment. First things first, though, let's grab a schedule for tomorrow because tomorrow's a pretty busy Tuesday morning. I have two big news events I'm watching tomorrow morning. First one is the biggest news of the day tomorrow, the retail sales number at 8:30 Eastern time. And probably a second place to that is the industrial production number coming out at 9:15 Eastern time. We know that everybody is watching for the FOMC announcement on Wednesday afternoon, possibly the first rate cut coming on Wednesday. But again, big news tomorrow, retail sales at 8:30, industrial production at 9:15. Don't be late tomorrow to our trade room. We'll prep our charts, get organized, and trade the reaction to retail sales tomorrow morning. Those are two things on my radar. You want to keep those in mind as well. But let's get back to our charts, though, because it's good to know when the news is, but the money is made on the charts in front of us. Speaking of charts in front of us, I mentioned earlier, one big clue here is on the 60-minute hourly chart. Big move up. We're obviously very bullish overall. Let's drill down now to some tick charts. Now, tick charts make entry timing easier because they make pattern recognition easier. This is a 7,000 tick chart, upper left-hand corner, all the time frames there for you. And if you're watching for the first time right now, this is the 21 EMA. It is pretty much the only indicator we use to find lots of winning trades each week in our trade room. I mentioned there are two more important clues on these tick charts. One of them is right here in front of us. That trading range, two things about ranges. One, they act like a magnet. We go up, back into that range, go down, back into that range. Ranges act like magnets and they like to rotate the amount we go below, above, below, above. What we'll do is we're going to use these things like trend lines for triangle levels. We're going to use these pendulum swings, the amount above, the amount below, to time the entries on that rotation back and forth. So second big clue overall today, the first clue on the tick charts is this trading range. The third clue, one of the most important clues for tomorrow, is we have a ton of resistance up overhead. This is not just the S&P, it's also on the Nasdaq as well. Go back to that hourly time frame. You can easily see a bunch of prior highs up overhead. That really makes it very difficult As we go higher here, it makes it very difficult for me to justify being a buyer because now we're way high up on the hourly chart, running into major resistance with a range acting as a magnet underneath me. All right, that's a really big clue as far as I'm concerned. So put these clues together, and I have five trades I'm watching right now for the S&P. We might get only one of them. We might get 3 or 4 of them, but these are trades I'm watching for tomorrow. Trade number 1 out of 5 is if we go higher. I'm not going to pick a top on this, but I definitely like the idea of using resistance to sell back down again. One of my favorite reversal patterns, range reversal patterns, is called a crown reversal pattern. As we go higher, we're overall bullish. I can't force this thing to go lower. What I'll do is I'll let buyers come in. This is a horrible spot to be buying. If I can see buyers try once, go lower, buyers try twice. That's a lower low in price. Move just above that interim high. I want to see a nice strong red candle closing below that 21 EMA. One of my favorite bull traps is a crown reversal. It's trapping the buyers in once, twice. And think about this. If you're caught long buying above a range into major resistance, when those buyers get stopped out, they sell their way out. 1 out of 5 trades I'm watching for tomorrow is that crown reversal off the high. Now, sometimes we don't get those 2 tries, right? I want to go up and get buyers once, twice, get that bull trap, that reversal. Sometimes we don't get it. Oftentimes we go up and there's so much profit taking up here. There's so many bears enter the market up here. It gets whacked back down and basically V-tops off of that high. If it V-tops, it almost always begins to grind down. Anytime markets grind down like this, I'm going to mark a trend line off that low. I'm going to pin that trend line up overhead. That creates the channel, and repeat after me. First test is the best test. I want the first test, the first short off the top of that new bear channel. Again, I'd love to go up and trap the buyers in, but if we get whacked back down, watch that grinding motion going lower, use that to find that new channel, and don't miss the entry off that high. You know me, I love bull traps, like I'm showing you here. Oftentimes though, these will get underneath the 21 EMA. That leads to failure patterns. Pretty much any of the entry patterns you guys are learning inside the free video course can be applied to the high of that channel. Bull trap, failure pattern, pullback combination. Where does the market want to go? It wants to rotate all the way back down to the low of that channel. Leave your targets for that runner back down again. Mark the amount above, mark the amount below. Use that as a target on the side of that trading range. That is 2 of the 5 trades I'm watching for tomorrow. Trade number 3. If we find our way all the way down to the low of that range, I would love to be a buyer going back up again, but I'm not going to pick a bottom on this. Is this a good place to be selling? Please say no. Please say no. We're bullish overall on the hourly time frame. We're now at support underneath a range acting as a magnet. We know that ranges love to rotate back and forth. This is the last place you want to be a seller. What I'll do is I'll wait for the rookie sellers who are not watching my videos to try once, try twice. Now think about this. If you're short, your stops are right there, right? Stop loss right there. If you get stopped out of your short trade, you buy your way out. These are scenarios where buyers are buying off support because that's what buyers do. And once those bears get caught twice and their stops get hit, now the sellers become buyers as well. We used a fantastic example this morning, the trade room. We ran lower. See how easy that is? Bears try once, bears try twice, squeeze those stops and rotate back higher again. Trade number 3 is called a 2-try failure off of that low. Trade 4. Let's talk about trade 4 here. I would love to run lower. I would love to trap in these bears and squeeze those stops. However, you know what? We're an overall bull market. Would it surprise anybody if we ran lower and there were so many buyers down there, we whoop right back up again and begin to V-bottom off that low? Absolutely not. That shouldn't surprise anybody. Again, I want to buy down here, but if I don't get the good signal, I'm not gonna buy blindly down there. If we pop up off that low and we start grinding higher, you know how to trade this. Mark off that high, mark off that low, look left, find a prior swing, and man, oh man, these are some fantastic trades. And again, anytime we see the pop up like that, starts grinding higher, it's always that first test, the first test off of that low. And again, this could be any of the entry patterns you guys are learning in the free video course. It could be a bear trap like this. It could be a failure pattern below the moving average. It could be a pullback combination. The key though is, right, if it V bottoms off that low, begins grinding, don't miss that first test. It'll be a bear trap, a failure, a pullback, and leave that runner. Leave that runner. You know where this market wants to go. That is trade number 4 out of 5 trades I'm watching for tomorrow. Now, before we dive into the 5th one and wrap this all together here, let's slow down for a second, because I know that most of you guys and gals watching right now, you know these patterns. You're making money with traps and failures. You know why we love ranges. But if you're watching for the first time right now, this might be a brand new strategy, a brand new language to learn. Don't you worry. I teach this entire roadmap. I have hundreds of examples of failures and traps and everything in between. I go into a lot more detail of this stuff in our free video classes. What I'll do is I'll put a link up top for you, upper right-hand corner, grab that link that popped up there and take that free trading course, because the strategy I teach in that short video series will teach you a simple trick we use in our members trade room that tells us where to find the best entries each day. Then speaking of entries, I want to help you guys start timing better entries and making money on your own. I'll teach you 4 my favorite entry patterns, failures, traps, pullback combinations. I have hundreds of examples of these inside that free video course. Guys, the markets are way too good right now not to be making consistent money. If you're missing the best trades each day, if you've lost your confidence in your previous or current trading strategy, what are you waiting for? Hit that link that popped up there. Take that free video course, learn the roadmap, start making money on your own. It is perfect for anyone who's serious about making money in these markets. And also be aware too, I'm going to put all the important links to talk about tonight, the description of the YouTube video. I would definitely start first with the free video course, learn the roadmap, learn the setups. Don't forget too, we trade together every day in our trade room, 8 o'clock Eastern time. I'll put trade room membership information, the description of the YouTube video. And then on Twitter X, I post a lot of updates, charts, videos, mindset stuff on Twitter X throughout the day. If you're on Twitter X, give me a follow. Again, all the important links you'll need in the description of the YouTube video. But start first, as always, with that free video course. Learn the roadmap. Start making money on your own. Now, we talked about 4 out of the 5 trades I'm watching on the S&P. The final one, we oftentimes get that rotation all the way back down. We oftentimes will get a beautiful entry off that low, a 2-try failure entry. Like I mentioned earlier, we oftentimes get that nice big jump back up. We take our first profit target, 1-to-1, as we talk about and teach in the free video course. Stop moves up to point of entry. But with all that momentum, with all of that momentum going lower, every once in a while, we kind of get lucky and the market rolls over and takes out that low again. Now remember, this is a bull market overall. We're not a bear market overall. This is oftentimes another bite at the apple. Now think about this. Anybody who sells short on that pullback in a bull market overall, they're taking their profit down at that low. Sellers up here become buyers down here. Is this a good place to be selling? No, it's not. Not in a range market, in an overall bull environment on the 60. So we're not going to pick the bottom on this, right? We can't just predict those moves back up again. But if I start seeing these bears come in, try once, and try twice. Yeah, now I got you, right? Now you're trapped. 1 try for the bears, 2 try for the bears. I got your stops now, and I know how to squeeze. I know how to squeeze those stop losses. Now, very important, one more add-on trade here. If I can get these stops squeezed, the 2-try failure, where does the market want to go? It wants to rotate to the other side of that trading range. Watch closely here. As it goes higher, one more bonus trade we'll look for tomorrow is called a bear trap add-on or a bear trap entry. Very important. Watch closely here. First things first, it'll be a higher high in price. That higher high has a very shallow pullback to the moving average. It will barely come back and touch that moving average. Remember, anytime we see separation off the moving average like that, it means strength. That sets up for the bear trap combination off of this low. We call these double bottom retests. We run down, we trap in those bears, squeeze those stops up, and a lot of times, guys, this keeps going, right? And a lot of times it keeps on going. Like we saw this morning, the trade from this morning, right? But every once in a while, though, it'll run up, and then the bears will come in, they'll whack that sucker back down again. It will take out that low again. But remember, we need a lot more than that for this to be a full-blown reversal to the bears here. This is simply a gift from the trading gods for the buyers here. Rope those bears in, let them try twice, squeeze those stops, and again, think about adding to your position. Remember, if you want to make more money, don't trade more often, don't trade more frequently, right? Get better at adding to your winners and holding on to your winners longer. If I get a 2-try failure pattern down here, get that nice 1-to-1 winning trade. Let's add more to it. Find that higher high, that separation of moving average, grab that bear trap. Let me teach in the free video course and let that sucker run. Keep that rotation going back and forth there. Those are 5 trades I'm watching here on the S&P. Now, I have 5 more trades here on the Nasdaq. A little bit of a spin though between the Nasdaq and the S&P. The S&P is more of a bullish range right now. The Nasdaq has a slight different tone to it though. Let's grab Nasdaq here. Now, I have a number of trades, 5 trades I'm watching the Nasdaq. Before we dive into the Nasdaq though, if you're enjoying this video right now, do me a big favor, will you? Hit that like button for me. Make sure you subscribe to our channel. And I know you get a trading buddy out there that would love to learn this stuff too. Grab the link to the video. Share the video with a friend here. Guys, it means so much to me. You take your time out of your day to watch these videos. And every time you like the video, subscribe to the video, and share with a friend of yours, it helps me grow this channel. So thank you so much for tuning in, supporting our channel. I appreciate every single like and subscribe and share. So thank you guys so much for supporting our YouTube channel. Now, let's talk NASDAQ for tomorrow. We have a big move higher. We are bullish overall on the NQ. Big move up on the NQ. We know we're bullish, but we're pretty high up right now on the chart. Let's look at the tick charts here. The tick charts, again, are much easier for entry timing. This is a 4,000 tick chart, you'll notice there. A little bit different there than the S&P, and a very big difference between this chart, the NASDAQ, and the S&P. Look at the difference there. This is a bear move down into a trading range. Now, this is a big clue because what do ranges do? They act like magnets and they love to rotate. The amount above, below, up, down, back and forth. So think about this now. Even though we're bullish overall on the 60-minute time frame, this range below us is acting like a magnet. It's going to want to drag this market going lower. That's a very big difference between the NASDAQ, which is very bearish right in the short term, and the S&P, which is for the most part pretty neutral, right? Neutral, bullish. So 5 trades here on the NASDAQ. A couple different twists on this though than the S&P. First one's first, all of that resistance up overhead. I would love to go up, get one of those crown reversal patterns. And again, all this is, we go up, the buyers try once to keep going higher, the buyers will come in and try twice to keep going higher. Now we're a bull market overall. Can be careful with trying to pick these tops on this, that lower low in price, and that move right above that high. Again, strong red candle, closing below that 21 EMA. I call these crown reversal patterns. They are basically a bull trap. You can see as they run lower here, right? We pull back. The buyers are trying to get above those prior swings. Those are classic bull traps. We call them crown reversals every morning in our trade room. That's 1 of 5 trades on the Nasdaq. The other one, second one here, 2 of 5, is we go up. We may not get that bull trap entry up here. We may get whacked right back down again. If that is the case, remember, do not chase after it. The worst thing to do is, if it grinds down like this, you do not want to chase after, because again, I want to sell as high as I possibly can, right? I don't want to sell low. A good rule of thumb is to short the bounces. What I always do is mark off the trend line off these lows, bring it up around that high. Again, look left, find some prior swings. I don't care which one I use, but I don't want to miss that first test off the high of that channel, right? Makes sense? Draw a trend line off that low, pin that trend line up the top there. That creates a channel. This is the first time we pull back just the high of that channel. It could be a bull trap. Look at me showing you here. It could be a buyer failure, which you'll learn more about in that free video course. And again, where does the market want to go? It wants to rotate back and forth, right? Mark the amount above, bring that down below, leave that runner. If you want to make more money, get better at leaving your winners open, let your winners run, and ranges make it easy to do that, because we know once we find the trading range itself, then we know how big the move up will roughly be about the move going lower here. That is trade number 2 I'm watching for tomorrow. It is a V-top reversal. Now, if we do end up getting that rotation all the way back down again, this is one big difference between the S&P and the Nasdaq. The Nasdaq is going to be very bearish in that situation as it rolls lower. When I have a bear move into a range like that, and this thing rolls off that high, it's going to be very difficult, a lot more difficult than we have on the S&P. On the S&P, I mentioned a failure pattern, right? It's bears try once, it's bears try twice, and squeeze those stops like that, right? A 2-try failure, a very classic pattern we use a lot of in our trade room. However, in this situation, this may work tomorrow. What I'll be watching for, though, is a bear trap. It's basically a crown reversal pattern off of the low. As we run lower, we take out our pendulum swings, we take out our triangle levels. We find ourselves in a great place to get long. But again, we're a lot more bearish, though, on this one than we saw on the Nasdaq, on the S&P. So it's 1 try, it's 2 try. But again, because of all that bear momentum, this needs to be a bear trap. Why? Because I need to make sure that I'm in the green on that trade. I do not want to buy this as it goes higher. I don't want to buy it as it goes higher, because as it goes higher, with all that momentum, this more likely now we're going to pop up and roll back over and take out that low again. So in the small adjustment here in the Nasdaq compared to the S&P is I want to make sure not just a 2-try failure, but I do want to buy that bear trap pattern. Again, bear traps are very simple. It's a higher high in price, and I'm going to trap right below that low. We run lower. Bears are shorting down here. Horrible spot to be a seller, but again, I can't fight that bear momentum. Higher high, followed by a lower low, right? Higher high, get underneath that low. Strong green candle, closing above that 21 EMA, and that, my friends, is the entry looking for off of this low. Now, we may also, too, that was, of course, trade number 3 we're watching for tomorrow. There is a small difference, though. For example, if I go lower here and get that bear trap going lower, higher high, bear trap low, popping it up, and then they roll over and take out that low, see, now the sellers at this point, again, we'll take our 1-to-1 first target, get rid of all that risk on that trade. It isn't a losing trade, it's a winning trade. Now, once they go back and retest that low, see, now I can go back and be a lot more aggressive on this. Remember, anytime we see a strong move down like that, we have to expect those bears are going to want to retest that low. Anybody who sells short right here, they're buying their way out of that position right there, right? Sellers up here become buyers down here. This is where, again, we mentioned this earlier, this is a horrible spot to be a seller. This double bottom retest, I can certainly now use that same Two, try failure, bearish once, bearish twice, squeeze those stops. And again, don't forget, on the way back higher here, it's going to be that bear trap entry on the add-on, right? It's the higher high in price and trapped right below those lows. Does that make sense, right? These are the same two patterns, right? That is a bear trap pattern right there. Same pattern right there. They look a bit different, right? Because one is kind of reversal and one is a continuation, but they are the same kind of fundamental bear trap we teach inside the free video course. So the first leg down, I'm looking for bear traps or a crown reversal pattern we talk about in the free video course. If they roll it over and retest, now that's mission accomplished. The bears got what they wanted. Now trapping the rookies, to try failure into that. Again, separation off the moving average, higher high in price, and that trap right below that low. A lot of examples of those inside the free video class. And the final one, the fifth trade I'm watching here on the Nasdaq, very similar to the S&P. If we get that strong run down and we don't get that bear trap off that low, if this thing just simply V bottoms and whoop right back up again, if it starts grinding higher, we know what to expect. Mark off that high, find that channel off that low, and whatever you do, don't miss that first test is the best test off that low. And again, I wish I had more time to teach all this stuff on these videos, but it could be a bear trap, a seller failure pattern, a pullback combination, maybe if we're lucky, a strength trade going higher. Because again, we know now the amount below, the amount above. We'll keep on using that rotation, buying low, selling high, and that might be the game plan all the way through. We hear from FOMC on Wednesday afternoon. All right, guys, I am excited now for tomorrow's trading session. My 5 favorite trades on the S&P and Nasdaq. A couple differences there between the two because the momentum being so bearish on the Nasdaq, but that is the game plan for tomorrow. Now, don't forget, speaking of tomorrow, 8 o'clock Eastern time, every morning in our trade room. That's the place to be. The easiest way to start making money in these markets is to learn and trade along every morning, 8 o'clock Eastern time. I'm going to put all the important links tonight, again, in the description of the YouTube video. Start first on the free video course, learn the roadmap, start finding better entries. Any trouble getting started, any error message getting started, use live chat or call the office if you guys need any help on getting started. Right, guys? That's the roadmap for tomorrow. Hope you learned a bunch in this video tonight. Hope you use this knowledge to make a bunch tomorrow. And hopefully I'll see you sometime soon trading with us in the morning room, 8 o'clock Eastern time. Remember, in the meantime, be well, be nice to each other out there, and you better be here next time. Adios, amigos. Bye for now.